Hey guys, this is the gold chart on the 4-hour time frame, and here we'll be reading the structures. Okay, so if you're enjoying the market structure course, kindly subscribe and like to this video. This is the second episode of this market structure course, and it's very simple, guys. This is how you can easily map out your structures and trade along with them. So as a trader, you are to identify the movement of the price, the direction of the price. You can't just come out and start pressing buys and sell and wasting money on the chart. No, you need to know whether if you are to focus more on buys or to focus more on sells. And if you look here on the 4-hour time frame, you can see that price started this this ranging format. This is what I mean by range during the video that was explaining to you on range. This is a ranging market, and you should learn to stay away from it, okay? Because the market makers always use this as a manipulation area for price. Okay, you can see what happened here. First of all, the market broke out of range. It broke out of range, came, retested the range, and still pushed all the way to the upside. And before this range, there was a high that started this range, which is this. Okay, price broke out of that high, more like as if it was, a lot of people were going to say, okay, this is our trading range, and a lot of people would be expecting to buy maybe from this supply area, this demand area right here. And you see what happened? Price took them all out. That is why you need to avoid range. Okay, avoid trading the range and just wait for a clear breakout and manipulation to play out before you take any entries. Okay, so if you look here on the 4-hour, price took the high out and price formed this new high, which you can see here. This is the new high, and formed a new low, but price failed to break this high. Okay, and price formed this high last and went all the way down to break structures. And if you look here, internal, this is our internal structure. Okay, so if you look here now, reading the structure correctly, you can see that price, this is the lowest low. This high formed this lowest low because it was this high that pushed this entire thing. So you mark it out just like this. We are trying to know our bias, whether if the market is in a bearish market or the market is in a bullish market. That's what we're trying to derive now. So price formed this high, and this is the high that took out this low. Okay, where is the last high that took out this, that caused this push that took out this low? That's what you are going to ask yourself. And here we can see that price formed this high last, which pushed this entire market. And all of these things happening here, they are internal market structure. Okay, and if you have traded them, you could have still made money, but I don't want to confuse you guys. Let's just focus on the main structure so you guys won't get confused on this. Okay, so price breakout formed a new high. This is the new high, which is here. Okay, and where is the low that pushed price to form this high, which caused this sell? This is the low here. This is the low, and price came to break it. Upon breaking this, price formed a high. This high is an incomplete pullback, so price still came to form this low. Okay, high, from this high it formed this low, and price left a supply area from this region. Do you see? So once this low has been broken, which is a BOS, once this structure is broken, what are we expecting? A retracement. Break of structure, a retracement, just like that on a downtrend movement. Okay, so from this point you can see that price has changed structure and is now bearish at this point. Price created this high first and caused this break of structure. This is the second break of structure. So at this point we should only be looking for sells. And if you have entered this trade, where are you going to be targeting? You'll be targeting, just enter your trade here. If you enter your trade around this region, your target is going to be just the low for price to take out this low that caused this entire push. That is where you'll be looking out for price to take. And price finally took it out and caused what? Another break of structure. And this is where it gets interesting, because a lot of people get confused around this part. Okay, so here now, where is the high that caused this entire push, that caused a break of structure? This is the high right here. Okay, so now you'll be looking for, this is from this high to this low, which is being formed now and causing what? A retracement to push back into around this range. This is from this high to this is our trading range. So if you put your Fibonacci retracement, sometimes you wait for it to come to your 50% and you look to start looking for zones around that level to sell. Okay, so if you have checked a lower time frame, this is another supply area of price, which even stored inducement. It stored inducement. That is why I would have chosen that zone to sell from. This is an inducement, more like a liquidity, and price has formed this high. After this break of structure, price pushed back down and broke structure. Okay, and if you have entered around this area on your supply area here, you would be targeting where? This low. Okay, and where is the next low that price formed? Price push all the way down here and just take out this, then push back in. This is not a break of structure, but a break of structure is when price has pushed below, closed with candles. Okay, you can see price close here with candles. You can see, not with this wick you are seeing here. This is not valid, and upon this break, we are going to be waiting for the next low to be formed. Okay, and price came, formed this high. Okay, the low has been formed and price is now pushing back to form a new lower high after forming this lower low. It's just very simple. At this point, you should be only be looking for sales. Only sales matters at this point. Only sales. Okay, and this is the other block that price came to tap into here, and price sold down. And where was the low that caused that buys? This is the low here. Price came back down, taking it all out. Then price, what? After taking it all out, what do you now have now? We have this low, which we have around. This is the low that was formed, and this is the last high formed. So at this point, you are still waiting to sell from your supply area, but see what happened. Price came, took it all out. If you have entered here, this is SL for us, and sometimes it's not 100%, guys. There's no strategy that is 100% win rate, so you must learn to understand that. And price just came above here. You can see price just come here, then broke structure to the upside. So at this point, the trend has changed from what? Bearish to bullish. So at this point, where is the low that caused this entire push? If you look here, price formed a series of lower lows, a series of market structure here, which you can see. If you read it, you see that price started forming, taking out highs, forming its higher highs here, higher low, higher highs, higher low, higher highs. Then price break through, taking out all of this area, tap into a demand, and that's how price pushed to the upside. That is our change of character on this break of structure, which you are seeing here. So at this point, price didn't give a clear low, a clear higher low formed. So price break above here. So around this region, price broke and changed character at this point. So if we are to label this, we call it change church, okay, as change of character. This is it here, and price caused what? A BOS around this point, a BOS. So this is our BOS, and this is also our BOS. This is also our BOS. Break of market structure, okay? Don't get this wrong. And if price could have broken this low, price could have been a BOS as well, but price did not break. So around this region, you can see that price formed a new low. After breaking this high, price formed a new high, which is around it, and this is the low. So this low has pushed price all the way from here to form this highest high, which caused this lowest low. So at this point, we have another range at this point, and this is the highest high that was formed, which caused this push to the downside you are seeing here. Okay, so price expanded all the way to the upside, giving us a new high, then higher high. But this low you are seeing here is not valid because it's just weak. Okay, so I consider it as one push. So if you come here, you can see that price just came into this, gave us this other block which you are seeing here, and price just came to tap into it nicely, and price pushed but didn't break structure to the upside. Okay, since we are bearish, price did not break that structure, and you see what happened? Price smashed the lows. So at this point, what should be running into our mind is that price has changed from what? The bullish to what? To bearish market. Okay, if you look here, you can see that price break below it and closed on a candle close and formed this low. Then price started pushing all the way to the upside just like this, and it tapped into our supply area, which is resting around this point, and that's the way price melted. This is the way price melted right here. You can see. And where should you be targeting? You should be targeting the low that caused that push.